What's up, Capstone fam? Hey, this is another amazing week of real estate in the Phoenix, Arizona metro market. It's a great week. It's very hot, a lot of AC issues and challenges, but hey, check out those 5-star reviews on Google and look at what happened this week. Amazing. So we've got a new relationship on the AC front, and it is paying in dividends for our clients. Um, let's see how long it lasts, but for right now, it is rocking because it's an awesome opportunity that our new director of property management, Mr. Daniel, brought us. You will be seeing him sooner than later. He's an amazing dude, and we are happy and proud to call him Capstone. Hey, so this week saw a lot of different things that were happening in the market. We saw our first foreclosure that we haven't worked on in a long time, and I mean, back in the market was shifting in 2007, 2008, where we really built the business up from the beginning. We did a lot of short sales, but we didn't do a lot of foreclosures. The difference is in a short sell, you are selling the house back to you're selling it to another buyer before it actually goes to foreclosure. Now, in Arizona, you've got let's call it 2 90-day windows, right? The first 90-day window, you are not paying on your mortgage for 3 months. Within those 3 months, you basically then are getting a notice that says you're in foreclosure. And from that period to the sale date, when they sell it at the courthouse steps, you got another 90 days. So you got 90 days of no payment, then you got another 90 days before it forecloses. So you got 6 months. We are a non-judicial foreclosure state. So what that means is it's pretty cheap to foreclose on people. So remember when it used to be nuts, and back in the day, you go to a judicial foreclosure state where they have to run it through the judicial system. They got to run it through the courts a little differently, and it's very expensive. You've got lawyers involved. You've got a lot of other things that here in Arizona, we don't have to deal with. So the trustees, the banks, they can actually foreclose on the property a lot quicker, a lot easier. And you can negotiate with them, hence the short sells. So you sell it to somebody else. Hopefully the seller is able to convince the bank that it's a better option for them to sell it before it goes to foreclosure. What does that do for them? Often it removes them of recourse for the difference, right? So we call it it's where it's like debt forgiveness, right? They're forgiven of the debt in between, and they don't have a foreclosure on their credit, which can be a good thing. All right, so we're seeing our first foreclosure, which is looming on a property of a client of ours that is something that we're going to be working on. We don't see those very often anymore, and the numbers haven't spiked. This isn't like a sign of things to come. This is more so just a reminder that this is happening in the market. What we are seeing is signs of less money in the market, less money in the economy, and this is something that we're proactively talking about in our space at Capstone, because when we start seeing these little signs, we've got to get ahead of it, because it means that people are struggling a little bit more, which means that our properties or our business or whatever it is can become more of a target. Puts us more in the crosshairs. People are a little more desperate, so they're willing to take greater risks in order to get what they need to survive and or thrive. So right now in this space, we're seeing certain things. This week we saw a little more vandalism than we'd like to see on vacancies. We're seeing these types of things. So we're doing what we need to do to secure properties even a little bit more than we had been, and just again thinking about what's to come and how we can get ahead of it. So that was something that was a little bit more interesting. We also are seeing a relatively, same sales market. You've got a bunch of sub-markets here in the Valley. If you're in the Scottsdale area, you've probably seen appreciation this year. If you're in some other parts of the Valley, you've probably seen your values decrease. If you're asking about right now where to invest, it's that central corridor. What I would suggest people look at when they're looking at investments right now is where could they buy where there's not a lot of new builds being built. If there's new builds, you're in a much tougher spot because there's such crazy incentives for buyers to be purchasing these new build properties, and builders are having a hard time this year. So if you can find deals that are in the central corridor, I love the central Phoenix and South Phoenix areas because of the upside potential with projects that are going to be developed there that are not yet quite talked about or that are still in the works. Sometimes that stuff fizzles out. There's always an element of surprise when it comes to, hey, is this this project going to go through to fruition, or are they actually going to stall it out and the investor have to redeploy the assets somewhere else because money gets too expensive, like we saw in this last uptick, or something else happens. But again, for the people that are in South Mountain that have been looking for something like this a long term or been working on these things, my bet is with them. Well, hey, I hope this is helpful. Again, market is kind of chugging along. Our sales listings got a pretty good uptick in this last week, which is, interest rates didn't do much. They're still where they were, down tick just a little bit. So the confidence in the market, or lack thereof, is coming from other areas as well. So some of these things I think I'm paying attention to, and others I'm not. So if you've got good feedback on what you're seeing in the market, where you are, or things that are directly impacting your bottom line in real estate, would love to hear about it. Thanks. I appreciate you watching.